And here's this morning's finance breakdown. Despite a 1% rise on closing for the Dow, Nasdaq continues down, closing 2.4% last night as investors continue trading in their tech stocks for bonds. The dollar's surge seems to have been stymied after wholesale inventories came in flat for January to 1.3% month on month. And we're waiting for the $1.9 trillion relief bill, now passed by both houses, to be voted into law this week. Still, as we can see from the dollar and bond yields, the excitement just could be over for now. Later this afternoon, the National Federation of Independent Businesses will be reporting on small business optimism, followed by the 3-year note auction at 6 GMT with hopes for a slight flattening in bond yields. The DAX led European benchmarks up yesterday, adding 3.3%, bringing it to record highs, primarily on bank shares, according to Reuters. Auto and insurance shares were also up. This morning, we're seeing the start of a reversal with major markers down, and the euro slightly up on the EU's rather nice 5-point investor confidence marker for March. Germany was hit with a 2.5% contraction in January's industrial production, but the third consecutive month of improving manufacturing sentiment, which just could be justified. This morning, we're seeing an impressive increase by almost half in the nation's trade surplus to 22 billion euros. Later this morning, we'll be getting employment and GDP figures from the EU, and of course, later this week, the ECB meeting with hopes of further fiscal aid. Chinese equities continued down this morning, while the Nikkei added 1% and Australia a half. Business confidence down under is up 6 points to 16 for last month. Overnight today, we're expecting consumer confidence there and building approvals plus sales, alongside producer and consumer inflation from China. The yen lost 0.25% overnight after Q4's GDP came in at half the previous quarter's 2.8% month-on-month, which is a tad under expectations. Household spending for February contracted by a whopping 7% month-on-month, and earnings continued down as well. And if we're talking about kicking a good yen while it's down against the pound, we can see the RSI preparing us for more upside. This says we're in an ever so slight retracement here. Either buy this dip real quick if you're adventurous and impatient, or wait to cross R1, aiming at R2 at 152.40 if you want to play it safe. About $90 billion worth of Coinbase private shares changed hands through Nasdaq's private market auction, which ended last Thursday. That's ahead of the company's upcoming IPO at an estimated $350 per share. Both gold and Bitcoin are back up on the upswing, but oil is surprisingly down this morning, as it looks like more than just profit-taking. After its Monday high, oil has been losing steam on basically opposing pieces of information. OPEC's decision to maintain production quotas, Saudi installations bombed, and lockdown lifts should have been pushing the golden liquid higher. Technically, things look grim, though. We could break below support at 64.63 quite easily, leaving the asset susceptible to 62.60 quite conceivably. As you can see, volumes are low. They tend to perk up at about noonish GMT. And until then, we're looking at some instability. At the moment, we're seeing a double bottom. The more solid amongst us should probably wait and see what the API says tonight, and that could kick us violently up or down. Remember last week they surprised us with a 7 million barrel inventories increase. With more and more competitors challenging its prominence, Tesla shares were down again. Market cap dropped by about $300 billion. That's about a third since late January's high. And Reuters reports that 3 major Chinese EV firms, NIO, Li, and Xiaopeng, are planning IPOs in Hong Kong this year. Li and Peng are already being traded in New York. DuPont announced yesterday it would be buying back about $1.5 billion worth of shares by June next year. And finally, child activist Malala Yousafzai is partnering with Apple to produce programming for girls. The price of fame. We'll see you again tomorrow.